on
Recording in progress.
real-time value on this. I hope you might take notes. You might not want to take notes, you just want to follow through, but at the same time, you just want to, pay attention to whatever we are saying here, right? So now, one of the things you want to do is there's something you have to do when it comes to, okay, let me start with this. People say you hear the quotes every time on Twitter, right? I'm no longer really like active so much on Twitter like I used to be before, although my account is still there, right? But you hear people say things like day trading is not everyday trading, right? Now the thing is, many of them don't really understand what it means. They just know it's a quote, right? And many just feel like if your setup is not there, you don't have to force it, right? So and all of those things. So largely, it's not really about um uh, people feel the quote of the trading is not everyday trading. It has to do with not you over trading, right? Then people also say show up every day, but don't trade every day, right? So I want to really explain what it means, right? So there's something you have to do every daily. There's something you have to do on a daily. There's something you have to check every day on the daily candle. There's something you must check on the weekly candle. There's something you must check on the monthly candle. So let me start on the monthly, right? So when it comes to the monthly candle, this one, you want to check how every monthly candle closes, right? How a monthly candle closes, right, matters a lot, right? It gives us more intel on how the next month is going to be. So for example, the way, let's say June trades into a particular key level, June trades into a particular key level from an old monthly key level, and it trades into it and it closes above it, right? Now, if the monthly candle closes above it, there's only two things we want to see, right? So we see that monthly of June has actually traded into a monthly key level and it has closed above it. There are only two major things that we need to confirm that July is going to buy, right? The first thing we want to see is we want to scale down to one time frame lower, go to the weekly, right? And see if weekly is going to give to us a liquidity sweep and break of structure on the weekly time frame, or we want to see the weekly time frame give to us an engulfing, right, which is very important, right? The moment we see that the weekly has given to us an engulfing, right, we want to see price tap into that engulfing. We must scale one time frame lower again to the daily, right, and we begin to look for more trading opportunities, and we'll just begin to scale until that entire move on the monthly is exhausted, right? So there's something you need to do on the monthly, right? This is something you just have to do once in a month. Like, we want to always check how did the previous monthly candle close. Like, for example, how did June close, right? January, February, March, April, May. How did May close that is leading to what we have in June, right? It tells us more intel. So there's something we have to do at the beginning of every month, right? Which is we going back to the monthly time frame to check how the previous monthly candle closed. Where did it react from and how did it close? Then we scale one time frame lower to be able to confirm what price is actually creating for us. That will guide all your decisions for your trade in that particular month, right? So there's something we want to do also every week. The same way we do it every month is one of the ways we do it every week. At the beginning of every week on a Sunday, we want to check how the previous weekly candle closed, right? That is very, very important, right? We want to see if the weekly candle traded into a particular key level, let's say it closed below it, right? If it closes below it, it is not enough reason that it closed below it to say that we want to look for selling opportunities all through that week. No, right? Because the next candle can come, break above it, and price will just continue to buy, right? Even if the previous weekly candle closes below it, right? So one of the things I had a call with Dixon one particular time, and before majority of the people joined the group, I had a particular call with him and I was telling him, we're talking about journaling, and I was telling him one of the ways you journal your thought process in trading is that, for example, on the weekly time frame on a Sunday, you are doing your analysis, right? The price traded into a particular weekly key level and it closed below. So one of the things you are going to be writing down in your personal trading journal, right? Maybe you are writing physically, is that the previous weekly candle traded into a particular key level, took out inducement or internal range liquidity, and it closed below, which means that all through that week, we want to be looking for selling opportunities. But when you scale one time frame lower on the daily, so the weekly is screaming for you sales, right? But when you go to the daily time frame, the daily time frame is still showing you like more buying opportunities, right? There's no break of structure to the downside. It means that there's every possibility that these daily sales that you are seeing, right, is just a little bit of retracement that is also reflecting on the weekly time frame. So this daily can come to a particular key level, retrace, give to us a buy continuation, and it will continue to buy. That is why you see the next weekly candle will come, it will break above this particular key level, and all other weekly candles will just continue to buy like that. So what we want to see is that as much as the weekly is screaming sales, if the daily until the daily gives to us a confirmation that we are going to continue to sell. The daily confirmation doesn't have to be a liquidity sweep and break of structure, right? The daily confirmation can only be, sometimes it can be an engulfing, right? Or it can be a key level that was disrespected. Price will come back, tap into that particular key level, and we know that the weekly and the daily has already aligned, right? So this is something we want to do every week. You must journal your thought process. What is the weekly saying? How did the weekly time frame close? Where did it react from? Did it react from a weekly open close? Did it react from a daily open close? That saves you a lot of stress all through the week. So you are not everywhere trying to do everything. So we know what we want to do every month. We know what we want to do every week, right? And when it comes to every day, right? So when it comes to the daily thing, right? The daily routine is that for daily, you have to work with the daily and the 4 hours, right? But most especially the daily. So let's say you come on the daily time frame, daily is showing to you a liquidity sweep and break of structure to the upside, right? But the 4 hours is showing you that price is reacting from a 4 hour key level and it's trying to go to the downside. Now, this daily is showing you that price is bullish, but this 4 hours is showing you that we are reacting from a key level and we are looking like we are going to the downside. Which one are you going to go with? You are going to go with the daily, right? Because the daily has given to you a sweep of liquidity and a break of structure, or the daily is giving to you an engulfing, and price is showing you, that price wants to move to the upside until it means that these 4 hours can just be a little bit of retracement. All the retracement you are seeing on the daily, that 4 hours is reacting from a key level and trying to close below, all of these 4 hours movement is just a retracement on the daily, right? So we know that on the daily, I'm journaling my thought process that on the daily, we already have a sweep and a break, right? Or we have an engulfing, price has created a key level, and we also have a daily inducement, right? The next daily candle is serving as inducement. So it means that anything I'm seeing on the 4 hours is only going to be a retracement. I'll wait for the major trend and we want to continue to buy to the upside, right? I know that everything I'm saying might not make a lot of sense, but pay attention to what I want to show to you. So if you look at this June 14, I sent this to the entire group for GU, right? So you can see that it makes a lot of sense why we should not even be looking to even be buying GU in the first place, right? So look at what GU did. So you can see if you move to the line chart on the GU, right, you can see this is an A-shaped key level that was actually created. You can see how price traded into it. So one other thing you would notice that price did was that the previous weekly candle that was created in June, this previous weekly candle was created in June 3rd. So one of the things you will notice that price did was that this candle, remember what I said to us now, if you move this thing to a line chart, right, you will see clearly, right, you will see, look at the entire structure here. We had higher high, higher low, we had this higher high. You can see how we broke below this pattern. In fact, we had this higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. We broke below two structural points, right? Can you see how we broke below two structural points? So now the line chart is showing to us that we have broken below two structural points. So we see where we are coming from already. We know where we are coming from. So even without even identifying the break of structure that is actually happening here, these two candles alone, right? Because you can see we had two consecutive candles here. You can see that these two consecutive candles engulfed this particular one, creating for us this V-shaped key level, right? You can see how it engulfed. Then this particular candle that was created on the weekly time frame, 3rd of June, right? The first week in the month of June, you can see how we took it out and we started to sell. We have been selling for 2 weeks, right? One of the things you will actually notice is that you can see because of how this particular weekly candle closed, right? Throughout this week, the ideal thing we should always all be looking for is for more selling opportunities. Where did price come to react from again? There was nothing deep that price came to react from. This is another open close key level. Are you seeing where price came from? You remember when I sent it, I told us that you can see where price is at the moment. Price is at this particular A-shaped key level. We took out this particular weekly high, right? You can see how we closed, right? Candle closure matters a lot, especially on the higher time frame. It matters a whole lot, right? So you can see how we closed below. It means that we are going to the downside. So the question is, to where exactly are we going to? Where exactly are we going to, right? And we said, this looks like an ideal place that price wants to come to. This is the key level that price that had an inducement liquidity that is resting here. Price disrespected it. And ideally, we want to see price continue to drop to the downside until price gets here. Maybe if he gets here, we are going to satisfy two conditions, right? Sweep liquidity, rebalance this old imbalance at this specific pricing level that was created, and we might just continue to buy to the upside. In fact, all of these sales can happen. In fact, we can continue to have more sales all through all through this month of June until we get into July. Then July can start buying. Are you seeing now? Can you see why we should even look for more sales, right? Now, context to our weekly time frame. We swept this previous weekly high, tapped into a key level, right? That was created. As you can see, the first thing that we are noting on our journal is that the weekly time frame took out an old weekly high, tapped into a key level, and it closed below. right? So which means that the weekly is screaming more sales, right? As much as the weekly is screaming more sales, we are going one time frame lower to look for confirmations. Look at what happened on the daily. Are you seeing now? Look at what happened on the daily. So you can see on the daily here, right? For this daily here, you can see what we did here. Move to the line chart again. Are you seeing how you on the line chart here, we only swept liquidity. We broke below this particular low. Impulsive move to the downside. We broke below this particular low. Where did you see price come back to here on the daily? Look at this. This is an open close key level here, right? This is an open close key level that was tested once. It was respected and it was broken impulsively. Look at how price came back there, right? On Wednesday, right? And price started to drop. You can see the impulsive move that is happening all through this week. Look at where price is actually going to. We have this particular liquidity to go. This is an old daily low that needs to go. So what can even happen maybe likely tomorrow, because tomorrow is Friday. Today is Friday. We might not see so much volatility in the market. We might just see some price will just go to the downside. And Friday pricing action might just close here. It might just close here, prepare for next week, right? We don't know, but it might just close somewhere around this place, right? But we want to see this particular low go, right? So you can see how we came from. You can see how we came from the weekly time frame, tapped into this, swept liquidity. We broke below this particular low. As long as this daily is showing us a break of this particular low, everything we are looking for from the 1 hour time frame down to the 30 minutes, we are only looking for selling opportunities. Now, there is every possibility, as much as we know that this is like a setup we want to always look for, where price creates internal range liquidity. Internal range liquidity has to go, then price must take out external range liquidity. Do you know that as much as we want to continue to sell, price will give to us buying opportunities? That buying opportunities is just to induce buyers. Then it will use them as liquidity again. But price will continue to go in this intended direction. For example, look at what I'm saying. If you come to the 4 hours, now look at what the daily is saying. Look at the daily. Daily is showing to us that we have broken below this particular low. We are going to the downside. And daily is also giving us an intel. Look at this thing. Look at where daily is coming from. Pay attention. This is an open close key level that was tested once that got broken and disrespected. Now, price tapped here. How did this daily candle close? Right? Your weekly is showing you is screaming sales, sales. How did this daily candle close? We tapped into this particular open close key level and we closed below. It means that for the next day, we are looking for more selling opportunities. And you can see how Thursday sold. You can see, in fact, only this one move alone equals all of these moves that has been happening Monday, Tuesday, and Wednesday. Only this one alone, right? So even if you look at this from here, right, how important candle closures is, right? If you look at what happened here, all of these buys that happened from here, okay, because we can say, right, as much as we are bullish, as much as we know that we are bearish from the weekly, look at what price did, right? Remember what we said about liquidity. We took out all daily lows, we reacted, look at where we reacted from, right? This is an engulfing candle that created a key level for us. How did this candle close? We tapped into it, closed above. We tapped here, closed above. We tapped here again, we also closed above. The moment we tapped here and closed above, you can see what the Monday did for us, created a key level, right? So it started to give to us more buying opportunities. We bought until we got to a particular key level that is overlapping inside of this imbalance. Then the next thing was that we saw more sales. The reason why we have all of these buys, right, on the daily context, we took out old daily low, reacted from a key level that was created with this engulfing here. This Monday tapped into it, closed above. The moment Monday closed above, we are looking for buying opportunities. But we are keeping it at the back of our mind that the weekly is selling, showing us, man, no bite my tongue. The weekly is showing us that we are going to the downside, and the daily has confirmed it. Daily confirmed it. Look at how we broke below this particular low here, right? Body to body break of structure, because when we move to the line chart, that is what the line chart recognizes. That is where the volume is, right? We broke below this particular low, right? You can see. So, but that doesn't mean we can catch buys. But those buys are the retracement. That is why we're not holding all these positions for too long. We just catch a buy from around this type of area, 1 to 3, 1 to 4, we are out. And the moment price goes to this particular key level, we can see how we drop once, just once. How did it drop? We tapped into this key level here, close below it, and we started to drop to the downside. But look at what I'm trying to show to you. Look at where 4 hours was even showing people. 4 hours was creating even buying opportunities for people. Let me show you some. So can you see? Daily is showing us more sales. Look at what 4 hours did. Because the market will show you what you want to see, right? Look at what 4 hours did. 4 hours created a key level with an engulfing here. One. The next thing that 4 hours did again was to create a weight, created an inducement liquidity for us here. So we are looking at, oh, this is a perfect setup because number one, we engulfed, create an inducement liquidity. And now we have external range liquidity that should go, right? We have external range liquidity that should go. Look at what price did. Look at this. So look at price came to this low. Look at this. See, Look at what price did. Price played the key level here and started to pump to the upside, right? Only for price to turn from where? Look at this. Look at where price came to turn from to continue the sales. So there are people who were looking, early induced buyers were looking to buy from here. Price tapped into their entry and started to buy from here, right? Only for price to still reverse again on them, hit the stops. It's just because some people are leaving messages. I'm fast. Sorry. Am I fast? I'm trying to, I don't want to keep you guys awake till maybe like 3 o'clock or 2 o'clock. So that's why I'm trying to rush things. Please, am I too fast or is it okay? Okay. Thank you, Mr. Olu. So you can see how early buyers were induced. Are you seeing how early buyers were induced? I'm telling you, you can keep trading as simple as possible. You don't need so many things. You don't need to draw plenty things. You don't need to draw plenty. Just build buyers from the higher time frame, right? If you come to the weekly time frame again, let me show you something on the weekly, right? So if you look at this weekly time frame, right, look at what price did here. We created a key level here, right? After we created this V-shaped key level, this is a V-shaped key level that we created. But did you notice how price, look at the structure here, right? It is clear already, right? Structurally, we had this higher low, we had this higher high, right? So we know that we are broken above this external range liquidity, right? Structure. We're not even looking at all this one that is happening. We're not looking at past data. We don't need all of that. We're just paying attention to what price is doing now. We created a higher high, higher low, higher high, right? So we are paying attention to this most recent data that has been created for us. So we know that all of these old weekly lows are just going to serve as internal range liquidity for us. Are you seeing now? So the weekly loan from here, only this current data is showing us more buying opportunities. Because on the line chart, forget about all these weeks that you are seeing that is confusing you. Move to the line chart, higher low and higher high, higher low, higher high. We had a key level that is resting there, right? Look at what price did. Look at what price did. Price tapped into it a particular week in February, tapped into it and closed above. Are you saying now? Another week again in that same February, price came back to that same key level tapped above until the real momentum now started. So we know that price could have gone for this particular high. We might not be able to hold a trade until all these weeks, right? But we know because of where price is coming from. Remember the two types of liquidities you are looking for, internal to external. Now we know that this structure is bullish, higher high, higher low, higher high, right? We have internal liquidity that has been created already here. Price came to take out the internal liquidity here, played out from a key level from the weekly. You don't have any business looking for selling opportunities. Even if you want to sell, you should not hold the sales for too long. Do you understand? Now we have taken out internal range liquidity. The next place we should be going to is the external range liquidity. This is external range now. This is external range liquidity that should go. Internal range liquidity has been taken. We are playing off reacting from a key level. And because of our understanding of candle closure, look at what price did. We tapped into this place and we closed above. Then the next thing, a particular week where momentum now started to kick in, you can see what price did here. It engulfed. And after the engulfing, what did price do? Came back to the same key level, closed above, and you can see the momentum. Are you seeing it now? What do we have here? Higher time frame. So I can only be, we can do this on a weekly basis. We know what to do on a weekly. We know what to do. Look at this. So look at this one. Okay, so let's talk about this. I think this one is a very good example. So I think let's just stay on this, right? You see, this is where you're analyzing. We don't have to, right? Like I used to say, I don't talk down on anybody's work. I don't know, I don't do that. I will never do that. It is not consistent with my nature, right? Instead of we picking out one full order block like this, I would say we're looking for, maybe you pick another block like this. You pick no, right? Just pay attention to what price is doing. The story is in the price. Move to the line chart. Look at this. Weekly is showing us more buying opportunities, right? One, two. So we have higher high, higher low, higher high, which means that we have broken above this external range. See, it's just basics. We have broken above external range liquidity that is resting here. We have created a key level as well, right? So we want to see price buy from here. So as much as we want to see price buy from here, knowing fully well that we also have an internal range liquidity that should go. Remember what I said about when we're talking about structure, basics and advanced structure. I told us that if market is bullish, right? I told us something. Pay attention to what I said. I said if price takes out external range liquidity, you should expect a reversal. If price takes out internal range liquidity, you should expect a continuation in that particular trend, right? Then remember what we said about trading ranges. I told you that the same way a range starts is the same way a range ends. A range starts by sweep of liquidity and break of structure. To give you an order flow to the upside. Then the way a range ends is that it will still sweep liquidity and give you a break of structure, right? So price will come back for the last resort liquidity, then go for the main external range liquidity. That aside, look at everything that we are saying here. So you can see how we broke. So I said after price takes off an external range liquidity, it will reverse. If it takes out an external range liquidity, it will reverse. So now we have taken out, we have external range liquidity here has been taken. What can you see on the line chart? The line chart is very, very important. What can you see on the line chart? Pay attention to the structure that is being created. Higher high, higher low, higher high, break of structure, right? Break of structure. Now, if you use the basics of market structure, after external range liquidity is taken, where is price going to next? Price is going to the internal range. Then after internal range liquidity, where is price going to? External range. That is why we limited everything to structural liquidity and key level. We are not just calling it SLK because we want to have a special name. No, I'm not. It's not about the name. You know, I've told us already. We're not about name here. We're about looking, we're just here looking for results. We're just here trying to produce real-time results. It's not about the name. Do you understand? We limited everything to structure, liquidity, and key level. Structure, knowing that if price takes out external range liquidity, it will come for internal. If it takes out internal, it will come again for external liquidity. And the same way a range starts is the same way it ends. We took out external range liquidity for us to have a reversal. Look to the line chart. We created higher high, higher low, higher high. We broke structure. Oh, Zoom is telling us we have 10 minutes left. Dixon, I'll go. It said not about the ball. See, Dixon, Avec. I hope we are not sleeping. Are we sleeping on this call? Are we sleeping? Eh? Shall we should
No, sir,
do
no, sir.
shall we should not do roll call like this? So you can see structurally we have taken out external range liquidity. Then for us to come from external to internal, we swept liquidity, we broke structure. Structurally on the weekly, we have broken structure. So what can you see again? What can you see? Let's make it clear. Let's keep our charts clean. On the line chart here, we have taken out this external range liquidity that was created, right? Now we have a key level that we want to see. Remember what I said about key level, right? We have not even treated it very well. So I told us that first day that network was acting up. I said key levels can be used as entries and it can be used as your nearest point of exit. So you can see after we took out external range liquidity here, what did you see that price did? Price, we created higher high, higher low, higher high. We broke structure. Now, after the break of structure, move to your candlesticks chart. What can you see? Engulfing. We engulfed, created for us for us what? Look at this. Key level. How did our candle close? How did this candle close? We tapped into this key level, we closed below. The nearest point of liquidity that should go should be this one. This is our internal range liquidity. We even have more context again because we saw this previous weekly high taken. So what do we have here? We have a sweep of liquidity. We tapped into this particular key level, close below. So we know that price is coming for internal range liquidity. Hopefully price will stop at this particular key level here. Then if price stops at this key level, we can look for buying opportunities to take out this external range liquidity. So look at what price did. Are you seeing? Are you seeing? How did this candle close? We came back to the same key level on the weekly time frame, right? Are you seeing how the price is complete already? Look at that. Look at it. We came from external range straight to internal range. Look at this. Higher high, higher low, higher high, break of structure after taking out external range liquidity, right? Back to the basics. Let me reemphasize. Repetition is the mother of learning, right? Basics of market structure. After every external range liquidity is taken, expect a reversal. After every internal range liquidity is taken, expect a continuation. On the weekly time frame, we took out external range liquidity. We should expect reversal. We have created a V-shaped key level here, right? Now, for us to expect a reversal, we already had higher high, higher low, higher high. We broke structure. Now that we have broken structure, we want to see price move from external range liquidity that was taken here to internal. Complete. Internal range liquidity has been taken. How many weeks? 2 weeks. More selling opportunities, 2 weeks. So at the end of that particular week in February, price tapped into this V-shaped key level that was created, right? After tapping into the V-shaped key level that was created. So let's take this off. So after price tapped into this V-shaped key level that was created, how did this candle close? Now pay attention to how these 2 weekly candle close. These two. You can see we traded into this key level, close below, traded into this key level, close below, and we continue to move to the downside. How did this next weekly candle close? This one that came to this key level, it closed above it. So where is price likely going to go to? We are moving from, and like, remember what I said, after we take out external, we are coming for internal. If we take out internal, where is the next external? This is the next external, overall external liquidity that should go. So look at what price did. Same level again, closed above it. So look at this, engulfed. We engulfed here, created another V-shaped key level, right? Now let's see, we want to see price continue from here. Are you seeing that? Momentum now kicks in. Boom, boom, boom. Are you seeing? Momentum now kicks in, right? The same thing, the same thing. It's everywhere. The same thing. Higher time frame bias is not even a problem. I'm not even joking. The only thing that you might be having issues with would be entries. But higher time frame bias from the weekly time frame will not even be a problem if you understand structure and candle closures. Look at what price did here. Let's move. Let's take. I wanted to say, are we being blessed? But I remember, as you know, we church today. Are we learning? So, so look at what price did. This is the weekly time frame. This is the weekly time frame. Look at this. We had an open close key level here that is resting here. Look at what price did. Look at this. Price tapped into the open close below, came back again, close below it. And look at what price did. We had some sort of, I think because of the data feed, right? Price came, I don't know, but you can see how we closed, somewhere around here because of the data feed, right? Although I don't know if I think we have something like a key level there or something like that. I don't know. But because of the data feed, but you can see how price continued to sell only from the weekly, right? You can draw the intel alone from this weekly. Look at how we closed here. We engulfed, right? Somebody would have said that we don't know where price is reacting from here. We don't know. Nobody knows. This is July 23rd. We don't know where price is reacting from here, right? Okay, let's put it here. Let's put here, right? So weekly time frame has engulfed. Now let's go to one time frame lower. Can you spot it already? You don't need me to show you. This is weekly time frame, right? Weekly time frame has engulfed to the downside, right? Now you don't even know where price is actually reacting from, but we know that the weekly time frame reacted from somewhere and it closed below. And you can see all this momentum sells to the downside. Move one time frame lower. This is it. You should be able to spot it, right? Simple. Let's look at this. Previous daily high is going to serve as a what? Internal range liquidity. What can you see? Price would have to fulfill two market conditions: sweep liquidity, rebalance imbalance. But you are rebalancing imbalance at what price? At what specific price? Open close that is overlapping inside of this imbalance. My God. Are you getting this thing? Or am I talking too much? I'm trying to show you something. Are we together? Look at this. Look at this. Open close that is overlapping inside of an imbalance. The previous daily high was going to serve as inducement liquidity or internal range liquidity. Price tapped into it. And you can see all of the sell momentum that we had. We just continue to sell. Did we have buys? Yes, we had buys. But we know that because of how the weekly time frame is, because of how this weekly time frame is, we know that price will continue to move to the downside. Why? Weekly engulfed. This candle closed below. We moved to the daily to find out where it was reacting from, as much as it was not clear, right? We were reacting from an open close that got disrespected and is overlapping inside of an imbalance here. And we took out this old daily high. No. And we just continue to sell. We just continue to sell. We just continue to sell. Are you seeing now? So the same thing everywhere. The same thing everywhere. The same thing everywhere. Look at this. Let me show you this one. So you can see what we have here. So if we just look to the right, if you look to this, what is currently happening here, we have 1 minute, few seconds left. Should we share another link? Ghost, go and change your data. Go and change your link. Your what are they calling it? Your network. She will not go and buy network for you like this. So I want to share another link right now. We have about 40 seconds left for this call to end. So let me end this so that you can start converting, right? But I hope everybody joins again. All right.